Okay, everybody. Good morning. Happy Monday to you. Hope everybody had a great weekend. Gonna do a Ukraine update probably tomorrow. Ukraine was attacked. Had one of the hardest nights ever in the war on Saturday night. They continue to fight on, even after, I guess, a relatively successful NATO summit. I told you my expectations were quite low, at least as far as the U.S. administration recognizing Russia's terror, but they continue to fight on. As you know, I like to swing back between Ukraine news and Bitcoin news. But I'm going to keep it to the money supply today. All right, so let's switch back here. This is what I've been putting out since 2018, okay? And you can see the wild money printing since 2018. Of course, from the pandemic. And then they've been trying to cool it off ever since the end of 2021. But I want to look at Japan. Okay, so I mentioned how, though I have a global survey for base money, which is this right here, there's 50 currencies hiding in this chart, and this is central bank money. You cannot reduce the form of money any further than this. This is how modern fiat money looks. I don't have a global survey for broad money. Okay, what's the difference again between central bank money and broad money? Central bank money is the money that the central bank prints. Okay, it's called monetary base, and they don't always print it. Although it's true that when there are crises, it's the best thing that they know how to do, or the only thing they know how to do, let's say. But then there is broad money, and broad money is any deposit or any liability that an institution has to a client. When you count this stuff up, it's always a liability. Okay, so when you have a bank deposit, demand deposit, checking account, whatever you want to call it, in the bank, you have an asset, the bank has a liability. Banks do create money in this way, okay, so they can do it depending on certain regulations as much as they want. They could create as many deposits as they wanted. All they have to do with those deposits is make loans to other parties, and their books will balance. Again, I'm a Bitcoiner, as I presume many of you are if you're watching this, but the overarching theme of this is just to show how this stuff can go on a lot longer than people think. There's a lot of hype. Hyper Bitcoinization is only a couple weeks away. This stuff can go on a lot longer than we think. Okay, so here's the rest of the world right there in blue. That's 45 currencies right there. Take them away. Here's a pound sterling. You can barely see it there in the purple. Japan is next in red. I'm going to take away China in the gold. Take away the euro. Take away the dollar. This is Japan. Now, this is in dollars, but this is the monetary base of Japan. As of March, my last survey, $4.36 trillion equivalent. The top 5 currencies that I just talked about, dollar, euro, yen, pound, and dollar, euro, yen, pound, and yuan, Chinese yuan, make up 80% usually of the basket. But we're going to talk about this now. Okay, so what I want to just slowly break down for you, and I think you'll find it interesting. Good morning, Gio. Good morning. Hope you had a good weekend. Here we have, let's build these money supplies out, okay? So M1, M2, M3. Remember the United States, we've talked about this a lot. Here's M1. M1 includes two things. It includes demand deposits, and it includes what you call M0. Okay, so M0 is the physical currency. It's cash, what we think of cash. Okay, so everything that's in the dark green here is bank created. Central bank didn't tell them to do it. Banks just do it. Now let's look at Japan. All right. This is in yen now. Okay. This is in yen, money supply. This is in trillion yen. I have this money supply going back to 1955, rounds to 2 trillion yen. Now, 975 trillion yen. Whoops. My dates might have been messed up, actually. Hold on. I can fix this quickly. On the fly. I didn't check that. The numbers are right, but the dates are wrong. This is why I don't put stuff on my website, because there are just too many things to grapple with. Okay. 1 second. All right. Going to refresh it, give you a little bit of a taste of what you will see. What's going on here? Oh, that one wasn't refreshed. Almost here for you. Here we go. I think the other one is good, but I will check it again. All right. Again, you get a little bit of a taste. Is that still not fresh? Not refreshed. Get a lot of dead time too. Almost there. Almost there. There you can see the magic happen. All right. Here we go. As of May, we're over a quadrillion yen in May 2025. All right. Started out at 2 trillion, 1955. 70 years later, a quadrillion yen. Let's go back and look at US. All right. Big bump here from the pandemic. Also, an increase you can see in the rate after the GFC. Similar for Japan, okay? Quite similar. But also, Japan has more stuff going on, notably here before the GFC. All right. And you can't really see it from the 90s, but they also did a bunch of stuff here after the Nikkei crash at the end of the 80s, start of the 90s. Okay, but we notice for sure some big step ups in deposits here. Now let's look at M0. M0. This is also a very interesting difference. Okay, so what is M0 again? This is just cash, paper yen, and the coins that the central bank prints. That's part of the M1 money supply. M1 includes M0 plus demand deposits. That's all that M1 is. So that sacred demand deposit, which every Austrian thinks is something sacred, is in green. Although it's actually the total is green. It's the green plus the gray. Okay, everything includes the level before it. Okay, so as you can see there, it's 100, about 1.1 quadrillion yen in M1, 100 trillion in M0. That means 1 trillion is in demand deposits. But anyway, obviously, look, we're looking at 10% of the total is in physical cash. With the dollar, it's a bit more. And it was much more even, say, before the GFC. For the GFC, it was half. All right. Now, there's a couple reasons for this. A big reason is because foreigners demanded those dollars. All right. Every movie needed a suitcase full of Benjamins for the bad guys. It's a huge demand for dollars overseas. So that's a big part of why M0, those US Benjamins are a bigger portion of M1. But that's quite interesting. All right. So long before digital currency, before people were talking about it, I don't have the data for M0 before 1979 at the moment, but you can see even here, back in 1979, you're at looking like a sixth, 1/6 or 1/5, something like that, of physical yen to demand deposits. So it's a big difference. Okay, now M2, remember M2 is not your broadest money supply, no matter what people say on Twitter. Don't quote it. I mean, don't buy it, that it's the broadest, most liquid money supply. You got to go to M3. The United States, I've said it 1,000 times, has not published M3 since 2006, but I have a backwards compatible money supply because they do supply the components, most of the components of M3 still to this day. So if you add them all up in the correct way, you get about 36.3 trillion in M3. M3 includes M2. The only difference between M2 and M3 is M2 are retail, various retail deposits, savings deposits, time deposits, retail money market funds. M3 are institutional deposits of such. So institutional money market funds, large time deposits, repos. Remember, repos are Federal Reserve, sorry, not Federal Reserve, United States Treasury bonds that trade like cash. This is the money supply. All right, so this is broad money. Broad money for the United States, $36 trillion. Let's go back to the yen. First thing we notice here, broad money for Japan is much smaller relative to M1. Okay, so M1 is 1.1 trillion, M3 1.6 trillion. Compare that to the dollar. M1 is about $10 trillion. M3 is 3.5 times that. Okay. Again, I don't have all the data. I'll try to get it from books and stuff, but this is just what I have at the moment. I just wanted to show you, M1 to show you kind of how things change. Pretty smooth here, obviously. Even this is just exponential growth. It's what every money supply does. It grows exponentially. It will increase by a various percentage each year. Usually for the big currencies, less than 10%, but still pretty high. Okay, so we have M3, we have M1, we have M0. These are all public-facing money supplies, although, again, M0 is controlled by the central bank. But other than M0, which is cash, everything else is controlled by banks, by institutions, fiduciaries. All right? And often, when you talk about M3 money, you're talking about money that's not in banks. It could be in brokerage accounts. It could be in money market funds. It could be in hedge funds, pension funds. And of course, those things keep a lot of instruments in banks, but they can also be in non-banks. So this is what the broad money supply is. We'll make sense of it in a second here, but I just want to back it up. So again, Japan, we can see on a retail level, all right, so these are demand deposits. It's a very retail instrument. in the number one, the green. They started to do a lot even 8 years before the United States did anything from the GFC. All right, now let's look at the central banking side of the balance sheet, which is, again, still a liability, but there's no further down that you can go. It's what they call the liquid bank reserves or the master account, and also a little bit of alt cash. It's not that much typically. Most of the cash is in M0 here. But you put those two together and you get this black. It's going to be a negative now on the chart. There it is. Now I'm going to take off the green just so we can look at this a little bit more. All right, so if I do the same here with the Fed. All right, here's what the Fed did. Literally let's just zoom in here, from when the Nixon shock occurred. You had a little bit of a spout here because this was Y2K. There's a lot of money printing, but pretty standard, typical, normal growth, not much. And then, on the eve of the global financial crisis, the Federal Reserve, as far as that, you can think of this as like a digital bank account for banks. Okay, it's not real, it's not corporeal, it's not physical. But if banks would log into their dashboard and see how much cash they had, it would be here. All right, so less than 100 billion. And obviously we go into the trillions right after the GFC. QE1, 2, it's actually QE1, 2, 3. And as this number gets further negative, they're creating more cash. They're creating more cash for the system to lever up. As it goes negative, they're destroying cash. So again, think about Bitcoiners. I'm sure you know them. From 2014 to 2018 or 19, saying all that the Federal Reserve does is print money. They were not printing money at this time. It may sound pedantic, but it's just important to know that they don't always print money. All right, and now, what were they doing since post-pandemic? From 2021, they were not printing money, relatively. It is back up a little bit from the SVB fiasco and stuff, but they're relatively not printing money. The Federal Reserve has a complicated, of course, as always, so you can also add the Fed repos in, all right? Which I don't know why this is blanking at this point, but I need to fix something right there. The Fed repo facility is basically, as we talked about, repos or treasuries that trade like cash. This is when the Fed is getting into the market and trading repos with money market funds or something. So they're providing liquidity to the market. It's a liquid asset. They're actually taking liquidity away from the market, so to speak, and it's confusing, but they're giving the counterparty a safe asset and they'll pay them interest. So it's a really good deal for if you're a money market fund to just repo with the Fed. That's what this is. I don't know why this is cut off from here. I got to look at it. Again, why I don't post this stuff on my website. Things happen. All right, so let's now, this just confuses it anyway, the repos. It's not a big deal. This is the traditional bank money, main money. This is bank reserves, all right? 3.3 trillion in the US banking system. Let's see how much yen there is. And let's just see what happened typically around the financial crisis, all right? You see, interestingly, Ben Bernanke and co. got to work right away. Took them some time in Japan to really ramp up those bank reserves, but they did in a big way. And even before, here's the eve of the pandemic. They'd settled in about 412 trillion yen. Post-pandemic, they're at 543 trillion yen. So a different trend, a little bit more. Everybody's got more money. I mean, generally more money printing, all right? Even though they can take it down, they're going to put it back up again. I mean, they're going to print more. Japan is kind of just constantly printed yen. But here's another thing to point out. They had a lot of problems in two specific periods. Firstly was 92. And at least as it shows right here, they didn't really bail out any of these institutions with bank reserves. Okay. We'll go back to show how they did get bailed out. But they really started to print more money around the dot-com boom and bust. All right. They really did a lot of money printing here. Okay, so they're about 10 trillion yen, 20 trillion yen at this point, but they go all the way to 50 trillion. And this is all still before the global financial crisis. And interestingly, before the global financial crisis, they cool it off, pull it back. But now the GFC happens, and then of course they just join the money print of everybody else. Okay. So again, to be clear, let's add M0 now. This is the monetary base. When you say the monetary base, this is central bank money, state money. This is how much money the state has printed. This is also the analogous money supply to Bitcoin. It's also the analogous money supply to gold. And again, why do I have M0 as a positive number and the bank reserves as a negative number? It's because it's an asset and liabilities thing. These black, the black negative number is actually an asset for banks. So it's on the asset side of the balance sheet. But all the money that banks print is a liability for banks. Okay? So it just shows how, I'm trying to show at least how the system pyramids on itself. Let's leave M0. We took off M1. But basically, if you look at this picture now for Japan, zoom in. Let's see if I can make this. Sometimes my chart, yeah, whatever. So as of right now, there's about 1.6 trillion yen in what we would call bank money. Actually, pull out 100 trillion. Sorry, 1.6 quadrillion. 1.6 quadrillion yen, where yen is a little bit weaker than the dollar, so we're in trillions already, where most of the dollar stuff we show in billions. Take the M3, back out the M0, you get 1.5 trillion yen in bank money. Look at the bank reserves plus the M0. That's 650 trillion yen in state money, or the central bank. All right, so let's go back now and put demand deposits. Let's take off M3. Let's just look here again. Okay, so let's do a ratio now to see how things sort of look. You can't see it. I'm hiding. I'll take off my ugly mug. On the right axis of the screen, I have it's called money multiplier, right? That's what you're going to see on the right when I put this ratio up. But I want to look at what is the ratio of the green, which is demand deposits. And remember, demand deposits is M1 minus M0. So I got to take away the M0, which is cash, whatever. It's most liquid money supply, basically, demand deposits, divided by the bank reserves and vault cash. A lot of different ways to call these different things. I could call it base money in banks or whatever, but this is just how I'm showing it in the tooltip. So basically a quadrillion yen divided by 543 trillion plus 100 trillion, 643 trillion yen state money. Let's do a ratio. It's here. It's 1.8x is the ratio. Okay, let's zoom it out and see what's been happening with the data that I have. It's not much, but just to give us an idea of how crazy things have gotten since the GFC. When this number is higher, you can say there's more risk in the system. When it's lower, there's less. All right. So particularly here, actually, let's look at here. So this was the Nikkei. You can see a little bit happening here. You can't, it's almost kind of, you can't see it with the naked eye, interestingly, but you can sort of see the safety come in. Is they printed, let's take this off just to show, relative to what had happened, a few years before, when the Nikkei busted, they gave a little bit more bank reserves to banks, all right? So this ratio comes down. It used to be, 14 to 1, 13 to 1, came down to 9, 10 to 1, which is typically the US default, right? They say 10% reserves. Two deposits outstanding. But then it went back up in the mid-90s. .com happened, and then they print money again. All right, so they print money. And interestingly here, this is, you can see this is obviously not organic. So this came in, this is some form of stimulus. I haven't researched all of it. Sorry, Japanese listeners that are familiar here. But there's some form of stimulus that they put directly in M1. It's kind of like those stimulus checks, if you might remember, if you're American, that happened from the pandemic. Something like that happened here. Also, you can see the dark black negative gets bigger, and this black line goes lower. So they're just injecting liquidity into the system, providing more safety, bailing people out. Eventually, that you're going to pay with that with higher prices. That's how you're going to pay for this problem. They try to pull off the gas, though. Put a little bit more risk in the system, probably right at the wrong time. It's usually what they do, right? Before the GFC. So you get really risky here, more than you've ever been from a demand deposit perspective. 20x, 30x. That is the green money divided by the black money. Demand deposits divided by bank reserves. And when I say bank reserves, it's bank reserves plus vault cash. It's just a little bit of vault cash. 10x, and then this goes down. A little bit more liquidity from when the crisis starts, but then way down from about 2012, almost in a systematic fashion. And if we go back to the United States, put in M1, M0, and we do the same ratio, you can see the same thing happened. So pretty similar. A little bit of changes, right? Depending on, there was a stock market crash here. There was some stimulus here. But if anything, we can say that Japan is a little bit ahead of the curve than the United States because they were bailing out a little bit here, a little bit here. The United States didn't really bail out until here. And this is why I keep saying when I do, I know these videos can be kind of, you got to slog through them, but I think it's just helpful to back up if you're a Bitcoiner. They can kick the can down the road a lot longer than we might think. It's now been 15 years of very abnormal central banking behavior. Okay. This is why we've had 0% interest rates, is all this liquidity. You look at Japan, they've been manipulating rates lower since the 90s. For sure, the early 2000s. We had a podcast with Anthony Scaramucci a couple weeks ago, and he's talking about how early we really are. To me, if you look at charts like this, you understand how early we really are. Again, Bitcoin is not going to replace this. No matter what you might think, it's not going to replace M1. It's going to compete or work against these two black areas. This is what it's going to compete with. Bitcoin is core of the system money. This is core of the system money. Some of it's held publicly, that is the M0. Some of it's held only in banks, that is the bank reserves. Add these two up. This is the money supply, the monetary base that's most comparative to Bitcoin. Okay, now let's look at another money supply. First, back to the US. Let's go back to M3. Let's take out M1. Let's take off this ratio and let's put this on. Okay. I've changed this slightly because I think it makes more sense, but you may remember I had this as a red line before and it went up to like, 70x or I don't know, even 100x. I don't know, like a huge number. That was M3 divided by only, this number, which is the bank reserves. All right, it was like 100 billion. Okay, very small number before the global financial crisis. I took that down by also adding up M0. It's just to give you a better ratio. It's to give you a better understanding of the multiple. M0 is really not a multiplicative money. Okay, you don't really leverage M0. Remember, M0 is just cash. So people keep it under their mattresses. They keep it, it's in grocery store tills. Yeah, it is on balance sheets as like petty cash usually and stuff, but it's all over the economy. A lot of this isn't even in the United States. It's around the world. It's in some dictators' safe. So it's not really multiplicative money. But I decided to count it this time just to make it a little bit more comparable to Japan. How else do I say this? I decided to count it because you could do it either way, but it's a denominator money because it's core money that the central bank prints. So if you add these two up again, this is the monetary base, right? And yes, we have this Fed repo account, which for some reason is getting cut off here in 2023, but this is also included in the denominator with the U.S. Other central banks don't do this craziness yet. This is basically non-bank based money. You add all this up, you'll get something like, right here is pretty high, almost $9 trillion. Now it's down. We're down to like 6-7 trillion. Take M3, divide it by all of this, and I'll just take off these things, but take M3, which is, and then you got to remove M0, because this is still state money. So you remove M0, but to show you get this ratio. And again, I got to fix whatever's happening here, but this is how it looks. You can clearly see that M3 is stretched. Here, before the GFC, it was also stretched a little bit, even here when the savings and loan crisis hit. But now we're in a completely different ballgame, where we're like way under levered as far as bank money versus state money. I'm not saying that's a good thing necessarily. It's a lot of intervention. So anyway, that's the US. Let's look at Japan. Let's put on M3. Same ratio. Let's look at bank money divided by state money. All right, get something like this. This, by the way, is a very free market type of money supply movement. You see this right here? This is very cyclical. People spending cash. See, they're saving up after the summer into the fall, and then they're spending right at December. It's very, very cyclical stuff. The United States has less of that because it intervenes a lot in the market. But this interesting how these trends still continue to this day. This is how money works. Nonetheless, we can see that it was pretty high here. I wish I had this further back a little bit more, but you can see, okay, so the Nikkei popped right around here. Actually wasn't too much M3 money hitting the Japanese banks. There was more M1, as we saw, but not as much M3. And as this ratio comes down, presumably it's getting safer. But I only say getting safer is because there's just more state money in the denominator. So this is sort of a true money multiplier, you can say, about total money in the system, which is bank money, although it could also be non-banks as well holding some of this. I know it gets confusing, but basically fiduciaries out in the system, in the market, versus the state, versus the central bank. So bank money versus state money. We were at 19x. They intervened a lot here, took it down to 8x, then pulled off the gas before the GFC, back to 10x. And now just like the demand deposit ratio, just crazily suppressed, and only 2.3x. There's only 2.3 yen in the Japanese banking system, Japanese financial system, really, I should say, because it's banks and non-banks, per every yen, 1 yen that the BOJ prints. So it's completely abnormal times. Central bankers want to get back to normal times, but how are they going to do it with interest rates so low? And these are probably two of the worst offenders, is the BOJ and the Federal Reserve. All right, so take a look at that really quick. I'm going to check this if I have that all pulling through. Do I? Still there, interestingly. All right. Okay, so now I'm just going to refresh this. Now, let's do another comparison. There's layers upon layers of comparisons we can do here. Let's look at the Japanese money supply, not in yen, but in dollars. All right. So it's going to be here. We'll start slow, and you see how it's going to look, but we'll start slow. Here's M1. Let's go back to M1 in yen. Here's M1. All right, so this is native currency. This is in Japanese yen. Nice growing Japan here, post World War II. Let's look how it looks now in dollars. Okay, so this is yen, dollars, yen, dollars. It's very similar, but this is interesting because now it sort of depends on your perspective. Are you thinking about the money supply for an average Japanese person living in Japan? Or are we thinking about more in an international lens? How does this money supply look versus the best looking horse in the glue factory, which is the dollar? This confused a lot of people. This is only M1, but it's the same effect for the monetary base. Remember, the monetary base was bigger than even the dollar around here. So they were printing more and they were gaining in currency. They started to lose a lot of value from the dollar post-pandemic. So here you can see, look, this is yen. And when this goes down in dollars, they're losing value internationally. So the dollar really, really went back to supremacy in the pandemic. But just before the pandemic, they were keeping up. Let's look at the monetary base now in dollars. Remember, I know it's kind of weird that it's one positive, one negative, but again, one is in the financial system. One is the base of the financial system that only banks can use. So M0 is in the financial system. And again, I was right about here where I started publishing the monetary base. And even here into here, Japan was like leading the world as far as the biggest monetary base. And it still held that dollar value all the way to about here. And then the yen collapses in value, as many other currencies collapsed in value versus the dollar. So I just think it's interesting to look at, right? I mean, this affects so many things. It affects trade flows. It can affect, fiscal deficits, the money supply, the exchange rate, interest rates. There's a lot of layers to try to analyze this. Let's go back and look at this in yen. Here it is in yen. This is native currency. This is what the BOJ actually sees on their balance sheet. And this is kind of what the rest of the world sees. Add these two up. Got something like $4.6 trillion. That's going to match here. 4.36. This is in March. Let's go here. March. 4.3 trillion dollar equivalent. This is the money supply that will contend with Bitcoin. I have these same ratios just to see them. They'll be the same in whether you're in dollars or in yen, but I just left them here. Let's look at M3 now. Let's take off bank reserves. Okay. Now let's look at same for US. Let's take this off. M0. So still pretty small. That is physical cash versus total financial system money. 36 trillion versus 2 trillion. But even smaller, probably as a ratio. Yeah, similar in this case. 10%. Much less here. So the point is, nobody's going to give up that printing press willingly. They intervene a lot. They cause a lot of problems. They're going to continue to intervene. That's my takeaway from all this. US is going to all-time highs in M3. Japan in native yen also going to all-time highs, although kind of leveled off here. And if you value it in dollars, it's kind of even fallen more, right? That's a big, it's a big drop, right? 14 trillion down to 10. It's like nearly a third fall from this peak right here, pre-COVID. Whereas in reality, they were printing. Isn't that interesting? Let me take this off so you know exactly what I'm talking about. Just looking at M3. I don't want to say printing. It was they were expanding the money supply. The financial system was expanding the money supply, but because the yen was falling in value, sort of globally on the international stage, Japan's money supply looks smaller. All right, this is in dollars. And then here in yen, it's just rising. So this is Wittgenstein's ruler. I'll show some Bitcoin stuff here in a second. And it gets hard, to put all this together. But my goal is to put it all together for you, to give everybody like a sort of brass tacks about how these different economies look. But again, going back to the base money, here's the dollar, here's the yen in base money, central bank money. Okay, add them together, it's about 10 trillion. Remember, the total base money is 26 trillion, down from 30 trillion, December 2021. If we now think of broad money, all right, which is M3, which does include a little bit of base money, which is M0, right? It's hard to keep in mind, hard to keep all these pieces together, but that's what it means. And we look at this in dollar terms now. We have 37 trillion, 36 trillion in the United States, plus 11 trillion in Japanese yen, takes us to 45 trillion. But notice how much smaller the financial system is for yen versus the financial system is for dollars. And as I've said many times, euro dollars are not even included here. That's a very difficult money supply to calculate. No one knows. I've had ideas in my head for a while about sort of proxies for finding euro dollars, but it's very difficult. Euro dollars are just offshore dollars, okay? So dollars in a Panamanian bank account, or dollars in a Anguillan bank account, or dollars in a pound sterling bank account. Doesn't have to be a euro bank account. This is just something that took its name from everybody wanted dollars post World War II. There's plenty of liquidity sloshing around, plenty of risk for central bankers to explode inflation. Bitcoin is going to do well either way. But this stuff's not going down. I mean, this is why I'm an inflationist, not a deflationist. There's no way they can let the money supply collapse, so they won't. So Bitcoin will go up. It's a very weird system. I'm gonna look right now and fix why that's not working. Yeah, I don't know what was going on. Little glitch, but let's just leave M3 and let's leave this. All right. This is sort of a brass tacks, simple way to think about it. Before the global financial crisis, the financial system had $17 worth of deposits, accounts. Think of anything, anywhere where you had an account that was tracked by the Federal Reserve. And this didn't even include, again, more nebulous things like, I don't know, peer-to-peer lending was starting up here. That's not a regulated entity, but whatever. That's maybe not a big deal. It doesn't include euro dollars. But pre-GFC, there was $17.50 for every dollar that the Federal Reserve printed. Now that number's way down. they've bailed out so much, put so much liquidity into the system. It's only $5. Oh, and I say quote only. I'm not saying this is a good thing. They know what they're doing. I'm just saying, if anything, this is a green light for them to do more. Like, look at what happened during COVID. They were at the same 5x that they are now. Somewhere here, 4.5, 5x, right? June 2018, 5x. Okay. And with all the stimulus that happened during COVID, all right, the ratio actually started to go down because there was so much printing from the Fed side, right, that ratio started to go down to a theoretically safer level. So this thing could go, it's at 5x, it could go back up to 6x, and you'd still be lower than pre-COVID money printing. So in my opinion, these are the best ratios that you should look at, because you can see, all right, how bad things look at any given time. Again, I'm not defending that they know what they're doing when they print money. I'm just showing you that they will print. Look at Japan. It's the same thing. Japan's even more extreme. It's a little bit delayed for the extremeness here. Let's take off M0 just to understand. Put on this. No, it's better to just see it like this. It's very tricky for them to get back to normal banking, right? This is normal banking because they have put so much liquidity in the system. Thus, Bitcoin. Okay, that might have been a bit shaky with some of these charts not coming together, but that's what I wanted to lecture on today, I guess. Let me know if you guys have questions. We can do a Bitcoin chart. Same thing. This is becoming, I think, my favorite, just because you can see that this is the top percentiles, 90th percentile and up. All right, and you got these stair steps start to calculate these mountains anytime the price is above the 90th percentile, meaning pretty high up based on the trend. All right. The max 3-4 months, it's in this trend, and then it goes down. We're not even in the bands yet. We're just trudging along the trend line. Zoom in even to here. Look at that. I don't have today's data, but yesterday's price hanging out at that 108,000. The trend is 105,000. My trend. Other people may have different trends, but this is like, I mean, other power curve guys. I think this is probably an impossible price. 7.8 extra trend, probably 4.6 also impossible, also 3.9 impossible. But when you get to maybe here, from 2 to 3.2 times the trend, I think it is possible. So if you go out to the end of the year, all right, 2x the trend at the end of the year will be 250. 3.2x the trend will be 400. To remind you, in the last cycle, we did not get to the 3.2x. Right? We got above the 2.8x, which is number 6, which is the 96th percentile in my analysis. I know you can't see the tooltip that well there, the yellows, but you see we did not reach number 7. And if you're wondering again, why do my bands look kind of accentuated here? And why aren't they smooth bands in the past? It's because I'm keeping this multiple for what the trend was at the time. Okay, so at the time, the trend line did not look like this black line, this nice smooth black line. It's actually quite a bit higher, more parallel to the rainbow, but just higher up. But that's how the bands would have looked at the time with the amount of data that the curve had. As you draw it out, thing gets smoother, lower, and then really from about 2016, the power trend has been on. It has been the one to beat. I first posted about it right there. At the end of 2018. It was actually higher at the time. The trend line itself was a little bit higher. At 2018, the trend was right where this dip happened, right where this puking happened in November. It's like right there. It's right around, what's the price here? 6,000? 6,300? That was the trend line. So you can see now the all-time trend is 5,300, but it was 6,300 back in 2018. So that shows you the evolution of it. But I mean, it's been pretty solid. It's been pretty unbelievably consistent. If you're wondering why price stays subdued, people talking a lot about paper Bitcoin on Twitter. I like this post from Checkmate. He's being sarcastic. Look at all this price suppression selling by market manipulators who acquired their coins more than 3 years ago and are definitely not selling for profit in a bull market. Much paper. So if we zoom in, revive supply breakdown by age. These are great charts, by the way, that he does. Data from Glassnode. You know, these are long-term hodlers that are going into the market. So no wonder price seems subdued. There was a lot that came in right here that were getting themselves ready for 100K. They were ready to sell into 100K this time, and they did, which was like right around here. You know, thousands of coins a day were coming into the market, as opposed to the supply side. There were only 450 coins per day coming in with new issuance from about this point, which was April. What was it? April, May 2024, which was when the halving halved from 900 coins a day to 450 coins a day. So that affects it. I still think we're going to have a run. I don't know if it's going to go double top or how it's going to confuse. It's definitely going to throw a lot of people for a loop, including myself. But, you know, maybe we'll have a very long, for another 6 months, like along this trend line and quickly go up, you know, and then quickly come back. I just don't know. But it shouldn't be surprised with all that sell pressure that price stays around the trend line, or we're not, you know, remember, by this time last year, we were already here. Not last year, this time last cycle, all right, which I'm just roughly doing the 4-year cycles. By June 2021, we were coming down from the first high of the double top. And in the 2017 cycle, June, we were here. Looking more like 2017, actually. Although 2017 was a faster run, right? Because we had this really long bear, well under trend, until whoop, back up and then quickly to the all-time high. My thesis remains that there's two components, right? So there's the money supply, purchasing power, inflation, price inflation, money growth inflation, all the rest. And then the other component is the growth of the network. And I think until these things are more equal in their amplitude, and I'll explain what I mean in a second here, this is what will dominate the price action, is the growth of the network, which is this. I mean, it's price. It's price action. This is adoption. This is the power curve. We could put this on again. This is my new favorite all-time chart, right? So here's the activity in log scale of TradFi is basically the green, Bitcoin is the black, sort of the real Bitcoin dominance index. I've had various indices like this over the years, but this one is probably the best because I put it all together. On the left side, you have available gold and silver, unbacked fiat money, which means just the monetary base minus any gold or Bitcoin reserves. And there are some of each. Much more gold reserves, actually, in central banks than Bitcoin reserves. So you completely separate them. Monetary base is 44 trillion at the moment. Bitcoin's only 2. That's 5%. When will they cross? 2043. But I suspect sooner. Because also keep in mind, the more governments reserve Bitcoin, that green line will come down. Because you have to remove the Bitcoin from the backed Bitcoin from their money supply. But this is it. This is base money plus gold plus silver. So if you looked at dollar terms, it's only, again, this is base money fiat, right? We just talked about Japan and the United States here. Only 9 trillion of those two, quote, only. 10 trillion, whatever, if you round it. 10 trillion for both of them. Okay? There's a lot of other money in the system that's still going to slosh around, tracing treasury bonds, chasing yield, chasing stable coins. By the way, here's a... Oh, no, I didn't. Let me find it. Oh, I guess I myself tweeted it, didn't I? So we go here. And I just tweeted this today. Always asking me to promote because I don't pay. Yeah, I know. Move away. It's fine. All right, so this headline, you can't even really see it here. South Korea suspends digital yuan project amid stablecoin push. They're going to have yuan stablecoins. We can look at South Korea's money supply soon too, but stablecoins, not CBDCs. That was always going to be the case. A CBDC competes with their shareholders. Who are the shareholders of central banks? Banks. There's just no way. CBDCs do two things that banks don't want them to do. One, it takes away their customers because if you have money in a stable coin, account or a stable coin, even blockchain managed by the central bank, that by definition means those are funds that are not in a demand deposit account or a time deposit account or whatever, money market fund. So that takes away the clients, just that will take away their basic fees, but also will take away their profitability, because when you have money, liquidity in a stable coin and not in a bank deposit, that takes away the loanable funds for banks to lend on. So here, back to M1. Back to M1. This is about Japan and US, similar trajectories, right? On the other side of this trade, of this deposit, mostly at a ratio of 10 to 1, or let's say it used to be, whoops, there we go here, 10 to 1. That is what the banks hold in reserve versus their actual deposits, right? And even higher for Japan for some time, 15 to 1, 16 to 1, 20 to 1. It's kind of wild here for Japan compared to the US, which was before the global financial crisis. Mostly 10 to 1, 12 to 1, 13 to 1 here in 1980. That means for every $1 of bank reserves, there's $10 of a demand deposit, but that doesn't mean that the bank is holding nothing on the asset side of their books. They're holding $10 in a loan, and from that loan, they make interest. All right, so back here, if you just take away this loanable fund idea, right, where they can't lend money on their demand deposits that they have outstanding, then that takes away the profitability of banks. So no surprise to me that stablecoins are continuing to succeed. CBDCs are going to continue to fail. And the mousetrap will continue. All right, I've droned on long enough. I don't know if anybody's still here that wants to ask a question about Bitcoin or the money supply today. But I'll try to go through these with every major currency. All right, so we got to get euros, yuan. Yuan is probably going to be the last because that's a very manipulated currency as it is, but nonetheless. Here's the Japanese money supply in dollars again. So let's show M3. Oops. M3, M0. Let's show US M3, M0. Let's take away M1. Let's take away that. All right. Japanese money supply, American money supply. Dollars, yen in dollars. Much smaller. The max it got was 14 trillion, all right? In 2012, the max the US is 36 trillion in March. And again, notice 2012 was here. Look how much stronger the yen was. Here with 528, this is a crazy thing. 528 trillion, wait, no, it's wrong. This one, let me get a show. Right? Yeah. So we're looking at January 2012, 15 trillion. Right there. January 2012, 14.6 trillion, M3, dollar equivalent. So what did that mean in yen terms? January 2012, a quadrillion yen, 1.1 quadrillion yen. They have now added 500 trillion more yen. And in dollars, they're, 40% lower. That's 14 trillion down to 11, 10 trillion, 30, 40% lower. The Japanese are, along with the Americans, some of the worst offenders as far as printing money. Um, Again, I'm not saying it's all terrible and everything's going to zero tomorrow. What I'm actually saying precisely the opposite. These are big, powerful governments with big money supplies, and they want to keep the dominance of their currency. So, if anything, you can take comfort in Bitcoin knowing that they're going to continue to print more. This is the money supply that's comparable to Bitcoin. Okay. Bitcoin started here, the monetary base, the black circle, in total was only $8 trillion. Got up to 30. Now it's 26. All right. So by definition, they can go higher. They will continue to go higher. Chinese, Europeans, Brits, and most of the rest of liquid currencies, Swiss franc, Australian dollars, Taiwan dollars. I think that's pretty much all I wanted to say about this. You know, we'll keep an eye on this. All right, this green line again. It's just odd, right? It's just over. What's the word? Overprinted, over. You don't even have to know anything about how banking or central banking works, and you can see that this period from the GFC to now is way different than this period. Oddly, the ratio is about the same as the very beginning, 70 years ago, but by no means am I saying that 70 years ago was a riskier banking system than now. No. Yes, when the number is lower, it means it's safer, but this is just so much bailout money that's reflected in these green low numbers of 4x, 3x, 3.6x. Now it's up to 5x. And same with Japan. Japan is like systematically suppressing their uh, currency, printing a lot of money to paper over the trouble. And then again, if you do another twist of the lens, look at this in dollar terms, you can see it. Right? They were right here at 500 trillion yen less on the M3 money stock than they are today. And in dollar terms, it's kept suppressed. There's I want to start showing GDP as well. There's an interesting thing with GDP per capita where it has actually in dollar terms not changed since like 1993 or something. So back to here. One wonders how much longer it can go on, but I do think it can go on a lot longer than you think. So that was today's lesson. When I get all the big currencies in here, as you can see, at the earliest, it's going to be 1980 that we can go back to, if I can get all of them, right? And it's going to depend. I know that I can get Europe data back to 1980 for now. Chinese is like going to be not as good. Well, we'll see. But when I put this all together in a broad money supply, just like I have the base money supply going back to 1969, I think it'll be only 1980 for the broad money supply, but it's still a lot of time to see the changes. And if we just zoom in, let's zoom into everything pre-GFC. It always grows, right? It always grows, and this is just exponential growth. But what you see here is systematically quite different. But again, nothing that's going to inhibit them from printing more. Absolutely nothing. The only thing would be a crack up boom in prices, but that's what they're going to try to manage. You could almost just take the statement and flip it around, like I said, right? Like this is 55 years, okay? And if we only looked to whatever, 40 years here, it does kind of look crazy, right? On this side of the axis. And you might think this was like, oh, it's going to be the end. Nope, we just print a lot more. There's no reason to me why they can't continue to do this for another forever, basically. I mean, the pound sterling is the oldest fiat, uninterrupted fiat currency in the world, and that's been going on a couple hundred years now, more. Still going. Even though their size of the global pie has fallen a lot, there's pound sterling. $1 trillion equivalent. By the way, Bitcoin passed that this year. Okay, so again, Bitcoin is comparable to the monetary base of a country. This is central bank money. This is what this literally the printing press of the pound sterling looks like. Bitcoin passed it right there in February of this year. Bitcoin passed $1 trillion. Specifically the pound sterling for the first time. It's going to be a long race. Okay. Maybe that's enough numbers for today, guys. Got to do some other stuff. Hope everybody has a great week. Thank you for listening to me ramble on about Japanese M3 and M1 and the banking ratios of broad money to base money. That's probably a better ratio than this. Same thing, basically, broad to base. All right. Have a great week. Thank you for watching. Talk soon.